On today's Animal Spirits, Ben and I discuss the word of the week, softening.
We get into how many people actually live paycheck to paycheck. We once and for all answer the question of those surveys that don't work.
The age-old fight, who had it worse? People love to complain, boomers or millennials when it comes to the housing market.
We also got a good breakdown of the movie theaters. Michael is single-handedly keeping the movie theater business alive.
Hand up.
Stay tuned. Today's Animal Spirits is brought to you by our friends at YCharts. We teased a couple weeks ago the 2024 election guide from YCharts. They had it all ready to go. Biden drops out of the race and they updated it. I don't know what that means, but they said they updated it. Historical performance, post-election in the U.S. stock market, market volatility trends before and after the election.
How many times has there been a lame duck president?
I mean, off the top of my head, I have no idea.
Yeah. Zero? Where there was a one and done?
Oh, no, that's happened before.
No. But you knew it was a one and done. Not running for re-election.
Ford, Gerald Ford. He was only president for half a term, right? From Grand Rapids, Michigan, I'll have you know. The impact of moving to cash during election years. Grab your copy, link in the show notes. Unlock exclusive access to downloadable charts and visuals. Don't forget 20% off when you sign up with YCharts for your first subscription. Tell them Animal Spirit sent you 20% off. That's a screaming deal.
Welcome to Animal Spirits with Michael and Ben. Is that a that's not Tropical Bros. Where is that? Is that Stitch Fix? Where'd you get that?
No, this is just another brand.
Just another brand.
I stopped in for some breakfast today at the place across the street, and they said, "Hey, nice shirt. Makes me feel like I want to go on a vacation."
That is a nice shirt. You got palm trees. Very nice.
Thank you. As usual, good cop, bad cop. I'm light and airy. You're dark and right.
Dark and stormy.
Black is your thing. All right. The stock market is like little kids. This is my analogy for the week.
Mm-hmm.
You know
Go
how
on.
Sometimes your kid, it's extremes. You can have your child can be the little angel and say the sweetest thing in the world and nuzzle up against you and oh man, this is amazing. And then 10 minutes later, they could turn into a completely different person. Like snap of fingers. It's all right. I'm going to be my youngest daughter. I'm going to be sassy now. I just decided I'm going to be sassy. Or they wake up, they go to bed one person, they wake up a different person.
Not bad.
That's how little kids work. This is the stock market. It all of a sudden decides sometimes to change its mind. I think that's what happened last week. I was thinking though, I was cleaning out my office the other day. I'm a pretty organized person. Probably too organized sometimes. Like I'm the kind of person who, right when I get home from vacation or traveling, I immediately unpack. I'm that kind of person. Which is probably a little, I don't know if that's OCD or whatever it is, but I imagine you are not like that.
Oh, you think? Last night we had family over and somebody saw me loading the dishwasher and they said, "What in the holy hell are you doing?"
I don't know. Someone saw that.
I was throwing my large plates in the top drawer, like face down. They don't go that way.
Okay. So I was cleaning out my office a little bit, getting rid of some of the clutter, and I came across this old Life magazine from 1962. Someone had sent it to me a number of years ago, one of the blog readers, and said, "Hey, I think you get a kick out of this." And what went wrong in the wild stock market is the heading.
Was that Bay of Pigs? What happened? In
June 8th, 1962. It was a flash crash in 1962. Look at the returns here I posted. So it was the S&P Dow, whatever, was down almost 7% in a day in 1962. And you can see there's a lot of volatility around that. I've just put the daily charts in here in our doc. And I posted some of the pictures from back then.
Wait, what caused this?
There was no rhyme or reason. And so the whole heading is like the avalanche that went up and down. You can see they put a really cool chart in here going back to the Great Depression. And it was essentially, you had this huge boom in the 1950s. And then all of a sudden things in the early 60s rolled over and they were stumped. There was no good reason given. And they even talked in the article, I read it again, about how people still really didn't quite know what happened, how the Great Depression crash was caused. Like what was the kindling that sort of did this. And it was the same deal. It was like they had a flash crash and they didn't know what happened. And stocks, they were already down a little bit. I think they were down 10% or so. And then they really fell. And stocks ended up being down almost 30% from the highs that year. And John Brooks wrote about this in Business Adventures. You ever read some of the John Brooks books?
Love this book.
Business Adventures is really good. It's just
Go-Go
12
Years.
different stories. The Go-Go Years is good. Once in Golconda.
Great. Yep.
So I pulled this from the John Brooks, but he said the tape delay, which by 2:26 amounted to 55 minutes, meant that for the most part, the ticker was reporting the prices an hour before, which in many cases were anywhere from $1 to $10 a share higher than the current prices. It was almost impossible for a broker accepting a selling order to tell his customer what the price he might get. So they were saying, this is back when they had the tickets, They show the guys running on like, at the end of the day, there was, for hours and hours, all the traders on the floor had to sort through these tickets and understand what was going on. No one knew. So I guess my point is, and again, there was no discernible reason for this happening. There wasn't like there wasn't even a Bank of Japan raises rates 25 basis points kind of deal. I guess my point is now these things happen faster, but this is, I think, just kind of who we are as a species.
Does the Japan sell-off feel like a month ago, 2 months ago?
It does. A little bit.
It's last week. We're good. Where's the VIX at
Yeah.
now? 20? 20? No, 25, I think.
Do you think, though, that...
It's under 20.
If we're looking for an excuse for that type of sell-off, and obviously there's a million moving parts, but if we just went from, I'm making numbers up here, 20% chance of a hard landing, if that's what it was before, and now the past few weeks, well, we're re-rating from 20% to 40%, or whatever the number is, does that actually make sense that we had this quick re-rating of, all right, well, it kind of does, doesn't it?
But it was a perfect storm. It was the yen unwind, which is a thing. It was Buffett dumping half of his Apple stake, which probably would have sent the stock down 8% regardless. It was, did the AI bubble just pop? Like that trade just got too crowded. And it was a VIX at wherever the VIX was, 12. So it was the perfect storm. We were ripe for this sort of
It was like the Minsky
correction.
moment kind of thing, right?
Yeah. And then also, I'm sorry, one other monster factor was the weakening data. So it was all four of those things. You shake them up and boom, powder keg.
All right. Ned Davis has a good chart. After VIX spikes, SPX tends to rebound, retest, and re-rally. So they show all these huge spikes in the VIX, 1987, 2011, 2015, 2018, 2024. And they show the returns 3 weeks later, 9 weeks later. I can't do the math, 126 days later. I don't know.
That's 26 weeks.
And the returns tend to be okay. We're talking like, I don't know, 10% returns over the coming 4 months or so.
We've gone straight up since the opening bell on Monday of last week. Do we roll over? We retest those lows? Perhaps, perchance.
It does seem bizarre that you had such a huge spike in volatility, and we still never technically got a correction, a 10% correction on the S&P. The peak to trough drawdown was 8.5% or something. It seems like there should be more, but I don't know. We've had plenty of volatility these past couple of years.
Are you in the we're out of the woods camp?
I'm never in the we're out of the woods camp. I don't know.
Good answer.
I got nothing. I guess I'm in the people worry about more volatility about the election. Those will be the stories in the coming weeks. Is like, okay, prepare for election volatility, regardless of whether it's going to happen or not. Cam Harvey on LinkedIn says there's still time for a soft landing. How do you think LinkedIn gets these people to do the posts directly to them? Do you think some people it's just that's like their chosen platform or what?
Dahlia does that.
Dahlia does it. So
wait, I don't understand where are we with consensus? Is soft landing still there or what? I feel like...
So here's Cam Harvey. I believe that he does a pro and con, like soft landing versus hard landing, a case for each of them. And he says, I believe the pro soft landing wins. However, there are risks. The main risk factor is the Fed. They have increased the probability of a hard landing. However, the odds, at least for now, favor the soft landing. And so I think one of the reasons that everyone is so quick to predict a recession is because we just haven't had one in so long. You mentioned this a couple weeks ago. How many months have we been in a recession in the past 15 years? It's 2 months. That's essentially carry the one. It's like 1% of the time, right? 2 months out of the past 180 months, we've been in a recession. And on average, since 1950 or 1945, we've been in one once every 7 years. So it makes sense that people think, well, it's got to come eventually. But the point is that recessions don't die because of or expansions don't die because of old age. They have to be murdered essentially, right? Or hit by a bus. So, but the Fed could murder it. I think that's the realization people are coming to is that's the biggest risk right now is the Fed. I would still give the U.S. economy the benefit of the doubt, but I feel like, the risk of a policy error has increased substantially in the past 6 weeks or so.
Are we saying if they should have cut in July, that by the time September rolls around, it'll be too late? Unless you're saying, no, they should have cut in March. But if the market knows they're cutting, shouldn't that in and of itself do some of the legwork? In fact, it has. Look at the bond market.
The bond market.
The bond market is already cutting.
But I think for consumers and such, there is something of a lag. And I think just getting the ball rolling, I think psychologically for consumers, that's the big piece here.
Well, we're hearing from all sorts of companies in the retail space that demand is definitely moderating. There's just like no ifs, ands, or buts, especially on the lower end. We keep hearing that consistently.
Yes,
but does moderating mean a recession? What if it's just moderating from unusually large consumer demand?
That's the hard. I've got some more on that in a minute, but I put this together yesterday.
So I'm in the camp that moderating does not necessarily have to mean a recession.
No, I agree. Yeah,
at all. Like we might get one, but
that's the hard thing is how do you know?
We'll find out.
What's the difference between But no, the way that you predict a recession, I put this together yesterday, and I saw JP Morgan raises their odds of a recession by 35%. And I thought, man, why didn't they just go 5 more percent? Because if you do that, you get to 40. That's the key.
That's the sweet spot.
If you say 20% chance of a recession, no one believes you. If it happens, you can't say, no, you can't say that. If you say 80, that's way too high. 40 is perfect.
How about if the headline said, JP Morgan lowers odds of no recession to 65%?
That's true. No one does the inverse. But that's why 40 is perfect, because you say, it was close to 50-50. If it doesn't happen, you go, hey, 60% chance of a positive outcome. That's why 40% is the sweet spot for economists. Our chart kid, Matt, did this 2-year yield minus the Fed funds rate. And a lot of people say that the 2-year leads the Fed funds rate, usually. And he shows the spread between the two blowing out to, this is going back to 2000, about as high as it's been. And it usually means if that spread is this wide, a cutting cycle is coming. So the 2-year is saying, to your point, let's get after it. Come on. What are you waiting for?
But yeah, we know.
All right. Good question from Adam on Twitter. How low does the Fed funds rate go if we have a hard landing, unemployment above 7%, and a 30% drop in the S&P? Not that the Fed cares about the stock market. But I guess if there's a hard landing, it will be interesting to see, because I know some people say never again for 0% rates. And I wouldn't be in the camp that predicts that, but
2?
I don't know how
I don't know.
I don't know what the Fed's going to... If the Fed is slow to cut, but then they overreact on the other side, I wouldn't rule it out. But yeah, I'd say 2% is probably...
I'd rule out 0%. Absent something that is not even close to in the data right now, I guess 7% would be that. 0% seems highly unlikely.
It's pretty high hurdle. I agree. Yeah, going from 4% to 7% unemployment is, for a recession, as far as a recession goes, is not the end of the world. If it was double-digit unemployment rate, maybe we could talk. But yeah, I think 2% would probably be about the floor for me. That makes sense. All right, so you mentioned the consumer softening. Look at these 3 headlines I put in here. These are all from the last week. So the economy is slowing, news is back. This is from the Wall Street Journal. Has the U.S. economy reached a tipping point? Also the Wall Street Journal. The boom in travel spending has slowed, and this is from Bloomberg. Flights, hotels, and parks are all flashing travel warning signs. So everyone picked up on this. The word softness came up 16 times combined on the calls for Expedia, Marriott, Airbnb, and Hilton. So that's remember Cable Guy? Remember the porno password game? The password
I haven't seen that in a long time.
Okay, so the password for August is softening. It's not like falling off a cliff. And if you read all these articles, they all make the point of things are softening. People are, especially like you mentioned, low-income people. It said high-income people are still traveling. They're going to Europe. They don't care. Low-income people are either putting off pre-planned trips, like they're not planning ahead, or they're doing it last minute, or they're trading down. And so many people are trading down to cheaper accommodations. Here's one. Disney said this week that income from its theme parks dropped in part because of softening demand. The company pointed to economic uncertainty that is impacting consumers and said expected weaker consumer demand at its theme parks to persist.
If I had to look at one area of the stock market that is flashing at least a yellow light, it would be consumer discretionary stocks. If you look at XLY over SPY, that is at multi-year lows. But then I saw somebody tweet, and I'm like, well, but 40% of XLY is Amazon and Tesla. How much of it is Tesla? But if you look at the equal weight, consumer discretionary divided by the equal weight S&P, it's the same chart. So You don't want to see consumer discretionary lagging to that degree. Does not inspire a whole lot of confidence.
So if you look at the cruise ETF, it's like CRUZ, it's hotel, airline, and cruise ships. It's down 8 or 9% this year. So some of those stocks have rolled over pretty good. The funny thing is, though, that it again, all these articles that point to a slowdown are saying, listen, it's not collapsing. A lot of these companies have stronger revenue than before the pandemic. Travelers are still willing to travel. It's just people are being a little more discerning in their plans, which makes sense. Eventually, people had to. And with all the trips people have taken, they had to.
And in fact, it took way longer. When did the travel boom start? When the economy reopened in back half of 21?
It seemed like I would say, the back half of 2021. We thought it was going to be like a 6 month boom.
Yeah, it's lasted years.
All right, so I think we talked a couple times in recent weeks about the paycheck-to-paycheck stuff, and you always see those things. People $100,000 who make $100,000 a year or more are living paycheck to paycheck, 75% of them, whatever. J.P. Morgan did a big study on this, which was interesting, and because a lot of these are survey data, right? Could you come up with $400? J.P. Morgan looked at banking data for this, and I don't know how exactly they did it, but they looked at like 6 million households. And they wanted to know, could a household weather this emergency expense, or like how liquid could they be? So they find 77% of low-income households could cover an unexpected $400 expense, which is higher than those places usually, right? And they also say basically 92% of people can cover a $400 expense in total, not just low income.
Wait, everyone. I thought we were told that 70% of Americans can't cover. What was the number? Some ridiculous number?
So they're saying it's more like 92%.
That was bunk.
Yes. And they're saying people have more liquidity sources than you assume. And a lot of people, it comes down to, I could go into credit card debt, or I could there's ways to make it happen. And it says 67% can cover with cash savings. So these numbers are way better than you see and they break it down by income as well. There's some good charts in here I put, but yes, these numbers are way higher than those surveys have you believe. And they used actual banking data from people. So this seems more relevant to me.
And then also like just
debunked.
In the backdrop of like where the stock market is, and I know this is not the economy, but do we think that the AI boom is just gonna turn on a dime and the bubble's just gonna pop?
That seems a little too easy, doesn't it?
I don't know, to me it does.
It does seem like it'd be, I mean, whatever. If we go into recession, maybe these companies backtrack immediately. It's hard for these companies to all of a sudden cut on a dime, isn't it? For all the spending they've been doing?
A few counterpoints. NFIB, Small Business Optimism Index, is at the highest since February 2022. Does that usually happen before we go into a recession? Small business optimism at a multi-year high?
But isn't that the one where they've been pessimistic the whole way up for the strong economy?
Yeah, well, they're turning.
Okay. The vibes are changing.
You think small business owners are getting positive right before we go into a recession? That seems unlikely.
I have trouble believing the vibes. I feel like the vibes have been so off for 2 or 3 years now that it's hard to place a lot of faith in their predictive power. Is that fair?
No, it's not fair.
Now you want to believe the vibes?
I think
the vibes should have been strong for the last 18 months, and they weren't.
But it seems improbable. I agree, but these two things are not in conflict. Just because vibes were off on the way down does not mean that vibes improving here and now should also be discarded. I find it hard to believe that small businesses would be as optimistic as they have been in 2 years, right as we're heading into a recession.
And those vibes should get better if the Fed starts cutting rates for them.
Yeah. Now, a lot of this is inflation, but whatever. I put some credence into this.
Okay, I want to talk about loss aversion. I bought a handful. I haven't picked a new stock. Well, I guess Josh talked me into Pfizer a couple weeks ago, but I bought it only for the dividend, not for the breakout or whatever you guys talk about. Okay, I'm not a technical analyst. I don't buy that many individual stocks anymore. But I bought a handful of growth stocks.
How many stocks do you own? I own 14 stocks.
Probably 6 stocks.
Concentrated investor. Okay, I like it.
And
which stocks do you own?
So I'll tell you a few. Last week, there was 3 names that reported, and they were all up or down big. And on the same day, I think, or within 1 or 2 days of each other. So I own Airbnb, Zillow, and Shopify. And I bought all these stocks when the growth stocks got hammered. Some of them I don't know. I think I bought Airbnb right after the IPO, so I'm down on that going back to the IPO. Not a great trade for me or investment. But Zillow was up like 18% because Rich Barton stepped down, which is surprising to me because he seems like he's got a pretty good following and he's done a lot of great things. So I was surprised that Zillow popped that much on the name of the new CEO. And Shopify was up like 25% or something whenever they reported. But then Airbnb was down 15%. So I got a perfect test in loss aversion. I have 2 stocks up big, 1 stock down big. Which one do you think I focused on?
Airbnb.
Even the 2 winners don't negate the 1 loser. Psychologically, I know this, and I still can't wrap my brain around it.
Yeah.
Loss aversion is one of the most powerful forces in all of investing in money.
Totally.
That's it. What stocks have you been buying lately?
My most recent buy? Sherwin-Williams.
Really, the paint?
The paint.
You're hoping for a ReFi boom? Or like a
This was
renovation boom?
This was a technical trade, also an interest rates trade.
Why is Sherwin-Williams an interest rates trade?
Because I don't know how much of their paint is in like the home sector. I feel like it's got to be a large part of it. So refis, moving, new mortgages, all that's been on ice forever. And so if we get some sort of refi boom, interest rates come down, the housing trade picks back up. That was the thesis.
Okay.
And all-time highs don't hurt.
This is from MarketWatch. The refinance index jumped by 15.9% recently. A separate report from Fannie Mae on Tuesday showed that refinance applications rose by 21% from the previous week, and activity jumped to the highest level since September 2022. So mortgage rates across the board having decreased has increased refi application. Now, if you look at the numbers from the past, it's still way, way below, but it's off of the low number.
So what if we get, you don't even need a mortgage refi boom. What if you just get like a normal housing market? What if the ice thaws out? Shouldn't that put a floor under the economy? Is that not one of the biggest sectors of the economy?
I mean, I keep saying this is the biggest piggy bank people are going to tap. So home equity line of credits are up 20% since the end of 2021. So this is turning up too. Again, way lower than it was in normal times, but I just can't imagine people are going to let that equity sit there. We've added like $15 trillion in home equity since the pandemic. And to your point, if rates come down and people are feeling like things are slowing a little bit,
they're going to tap that cash.
A lot of people I've been saying this for a while, and people come back to me, mostly perma-bear types, I think, but, well, people can't tap their home equity line of credit if they don't have a job. But guess what? If the unemployment rate goes from 4% to 8%, doing the inversion thing, 92% of the labor force is still employed. That's not that big of a number. And the people who are still employed probably have enough means and equity to tap it. So that's my thinking, is just maybe we've turned over a new leaf and we learned our lesson, but I highly doubt that people, if they want or need the money and you want to keep that travel boom going, you think people aren't going to tap that home equity just sitting there? I find that hard to believe.
Also, people are still traveling. Like, I know that guidance matters more than the rearview mirror, but if you look at like I think we might have this chart later in the show, the TSA numbers, we're at all-time highs.
It was the most summer air travelers ever this year. Yeah. All right. So the Wall Street Journal had a really good piece on boomers versus millennials. And I feel like this is going to be, you kind of have like the tail of the tape, like a boxing match, over here. Millennials have a, 80-inch reach and boomers at whatever. So they're trying to figure out who had it worse in terms of home buying experience. Like the boomers in the early 1980s or millennials and Gen Z now. And they look at this affordability index, and it was worse in the early 80s. And they show that like how many people earned enough to qualify for a mortgage on a median single family home. And it was way lower in the early 80s. But they said because buyers in the mid 80s had so much more housing supply available, it was a temporary thing. So homes became more affordable really quickly, and there were more homes for sale. So in the subsequent years after the early 80s, things perked up immediately, basically. right? Whereas now millennials are facing unaffordability levels at pretty similar range, but they don't have the housing supply to back them up as well that we were building. Because in the 70s, they built a lot of houses. We haven't built enough houses in the past 10 or 15 years. So that's why we're millennials tip the scales and can complain that, sorry, mom and dad, I know you had an 18% mortgage for like a year, but I have it worse.
Yeah, it's bad, really bad.
They also show consumer sentiment, and they say like now they look at, is it now a good time to buy a home? And they said in 1982 it was 15% of people, and right now it's 12% of people. But it's funny, by 1985, 72% of consumers said it was a good time to buy a home, and mortgage rates then were like 10 to 12%. So it is so much funny how that anchoring and like the relative. So mortgage rates were 18, now they're 12. Now it feels like a great time to buy. Even though if you did the opposite, going from 8% to 12, you'd say this is the end of the world.
Yeah.
Maybe that helps us now with mortgage rates getting to 8%. If they go to 5, people are going to go, oh, this is amazing.
I'm definitely seeing more Zillow notifications on my phone for homes being listed.
Yeah, I get the email ones too. And I'm sure that it seems like there are some that are seeing price declines. You know, the thing I don't get is, so there's a handful of, around our house, there's a handful of like new homes that were built in the past 2 to 3 years.
Modern farmhouse?
Probably modern farmhouse. And you can tell that they're custom homes, right? They're not just like the cookie cutter ones, they're custom homes, and they're built, and then 2 years later they're put on the market again. And I know life happens and life gets in the way, but I can't imagine going through the whole process of building a new home and then immediately selling it 2 years later, and all the frictions that you incur along the way. I know sometimes people have to do it for jobs or whatever. That would be painful to me as a finance person to do that, because I know how much of that, even if the price went up, how much of it gets eaten up by the cost involved.
Yeah.
And for you,
and moving stinks. For me, what?
it's way higher because you have to like hire a lawyer and like do a seance and all the weird things that New York makes you do to sell a house.
I don't know what you're talking about. Seance.
I don't know.
Actually, you know, there's a movie called Tarot. I think it's on Netflix.
Oh, you pronounced it right this time.
Well, in the first 5 minutes, in the first 5 minutes of the movie, somebody says, "Oh, a tarot card," and they say, "Actually, it's pronounced tarot." And actually, speaking of pronunciations, we got an email. Somebody said that like sauna is the only Finnish word in the English language, or something like that. It's a Finnish word, and it's actually pronounced sauna.
See, this is like Audi or Audi to me. Just go the one that sounds better. Sauna, Audi. Sounds better. Going to those.
I say
sauna.
Well, sauna.
Okay. Did you get one yet?
A sauna?
Put it in your mudroom. All right. The other thing people say about the non-refinance thing, like, here's why the refinance boom won't happen. Well, everyone who had 3 or 4% mortgages, so what if rates go to 6% or 5%? They're not going to refi. Mike Siccardi has this one. So 92% of outstanding mortgages have interest rates below the primary surveyed rate. So, which is, 7% when he did this or something. But you can see that it's going to be a few, because there's been, 4 or 5 million homes that have transacted every year for the last 2 or 3 years.
How many of those are getting refied? Because people are lazy and they just don't know. Half?
You don't think a lot more of the people who have bought in recent years are going to, like, that's on their radar big time?
Totally.
They're just chomping at the bit to refinance?
Yeah. Is it half? More?
More. Don't you think?
I don't know.
Just because rates change so much, I'm sure that's top of mind for a lot of people. And I'm sure their realtors sold them on that when they bought the house. Listen, it's fine. You can refinance in a year anyway.
Yeah.
I'm sure a lot of those people are worried. All right, Torsten Slack, chart of the week. Share of fixed rate mortgages. 1990, it was 72%, so the other 28% were adjustable rate. Today, it's 95% is fixed rate mortgages. 2000, it was still 75%. So I feel like people kind of learned their lesson with the adjustable rate thing in the 2008 crash.
Or why would you not lock in a 3% mortgage?
True, but I know a lot of people who were singing the praises of adjustable rate mortgages as rates kept falling. Like, why are you idiots locking these rates in? My rate keeps going down and down and down. So it is kind of surprising people didn't really get into that. But I still think if you look at the numbers of fixed rate mortgages by country, like a lot of the other countries don't have the ability to do this. And you know why we have 30-year mortgages, right? This was
I
another
don't.
artifact of the Great Depression. And I heard this on a podcast recently. And the guy said that in the Great Depression, because something like 40% of all mortgages in the Great Depression went into default, like people couldn't pay them. And back then, they were like 5-year loans. It was a really, you had to put like 50% down on your house and you got like a 5, maybe a 10-year loan. And so what they did in the Great Depression to help these people stay in their homes so you didn't have just a mass exodus of homeowners is they extended the terms to 15, 20, 30 years for mortgages. And that stuck. I still think that was by far your best inflation hedge if you had it, is a fixed rate mortgage in the past 4 or 5 years.
Yeah, I mean, you're saying that like that's a controversial opinion.
No, I'm not. I'm restating a Captain Obvious fact here. I feel like sometimes we take for granted the ability that because we have a lot of foreign listeners that will email us and be like, "This, I can't believe you guys have this."
Yeah,
I'm saying appreciate the fact that we have a 30-year fixed rate mortgage here.
I appreciate the shit out of it. It's great.
I'm showing some gratitude.
Love it.
What's Albert's Bar?
Albert's Bar. You know, this is a great hat. This is the type of hat that fits my head. There's no like padding or lining on the front. However, I'll tell you a little secret. Hats that have this, for listeners, what is that, Ben? What do you call this thing?
The dad loop. So instead of a snapback hat,
this thing,
a little metal clasp.
It's a metal clasp, and it's not just on hats. It's on seat belts. It's on all sorts of things. I don't know how to work it. I got to be honest. I'm sure it's not that hard to figure out. My brain It
is a little hard. I mean, you have to push through.
I don't know which way it goes.
You push and you lift it up, and it is the clasp. But that's a.
I feel like on my first try, it always goes the wrong way, and then
Okay.
But anyway, you ask. Albert's Bar is a bar in Manhattan. It's a restaurant bar. Josh and I went there with a group of fellows last week. And when I walked out, the owner said to me, I'm a big Michael movie guy.
Really? Okay. He's a Michael horror guy.
He gave me £1. I mean, I gave him £1 and he gave me a hat.
Okay. Well, he like tarot?
I only watched the first 5 minutes. I fell asleep.
Okay.
All right. You listened to the Airbnb?
I listened to the Airbnb call, and I remember a year ago, Brian Chesky was talking about how they're going to integrate AI into a lot of the stuff that they do. I think maybe the idea is you're going to have an AI travel agent eventually, right? And he talked about, hey, listen, we're still excited about AI. He said, but I think one of the things we've learned over the last, say, 18 months or nearly 2 years is that it's going to take longer than people think for applications to change. So he said, if I were to think of AI, I'd probably think in about 3 layers. So he talks about all these, he's saying, yes, this technology is amazing. It's going to take longer to implement it than most people realize. And I think that they've run into, I don't know if they're running into problems and it's not working as good as they think or what, but I think this is where the AI hiccup comes, the relay race of all the investment into it versus the actual application that people are using it is that could be the problem, is this stuff is not quite ready in the time we want it to be.
You know what? It's also the problem. Look at this chart from Alex Morris. He shows the year-over-year change in room nights for booking holdings and Airbnb, and it's going down.
Okay.
Not great.
AI could have saved him, I guess. Didn't happen.
Did you listen to the Disney call?
No, I did not.
Do you still own Disney?
Yeah, I guess I do. I bought it for my kids to kind of, I guess, prove them a point that even well-known brand companies can be really crappy investments.
You lost money to teach them the lesson.
Yes.
So yeah, attendance was flat in the recent quarter for the theme parks, and that had been one of the strongest areas. So they're getting hit from all angles. Although
I can't tell if this is a good thing or a bad thing for Disney, because it was like they had their parks business booming and the streaming business stunk.
Yeah.
Now the movies are finally coming back.
Yeah.
They have like the top 3 movies this year, and now their parks are slowing. So is that a good thing for diversification benefits, or is it like,
it's the linear thing that's really hanging over them and just drowning them. So
what do you mean the linear thing?
ABC, ESPN.
Oh, okay. Oh, the linear cable. Gotcha.
We talked about the fact that the lower income consumer is feeling a little bit of stress. The high income consumer is traveling internationally a bit more. So yeah, they're mentioning what everybody else is. Look at this. So they show the Disney experience, which is really the theme park, and it's at an all-time high, but the guidance wasn't great. Look at just a reminder of how crazy COVID was.
Jeez.
Just a complete shutdown. All right, here's a counterpoint.
And they're back on trend.
Here's a counterpoint to all the moderating consumer things slowing down,
Softening.
They got a question about the ad market. And he said, the ad market is actually very healthy right now. We saw overall advertising grow 8% for the quarter. ESPN was up 17%. Direct-to-consumer streaming was actually up 20%. So it certainly feels very, very positive in that regard. Again, something you don't see when we're about to enter a recession. Advertising is the first thing to go.
That's something companies are willing to cut back on.
It's the first thing to go. They have a chart of the operating income for Disney Plus, and it bottomed out in the fourth quarter of 2022 with $1.5 billion loss. And look at that, they just turned a profit. Alex Morris has a chart showing the Disney video business annual revenues, and it's showing Disney Plus versus the linear networks. And in 2018, when they first launched this, of course, they were effectively at zero, and the linear networks were at a $20 billion plus run rate.
When's the last time you watched a show on Disney Plus? It's been a long time for me.
Probably, I don't know. Did they, not The Mandalorian. There was one after that. Obi-Wan, was that a show?
I tried one or two of the Star Wars shows.
Garbage,
maybe,
just garbage. But anyway, so next quarter they're gonna flip flop. Disney Plus will have gobbled up linear networks, which is pretty remarkable. But all these streamers are in such hell. Paramount, Warner Brothers, these stocks.
Well, to your point, the linear cable, they're all writing down their linear cable businesses.
It's bad.
Okay, the Wall Street Journal had a good one on movies. Did you see this or not?
I did not read this yet.
Okay, how going to the movies is changing, and they did a bunch of cool charts. And they show where would you prefer to watch a movie, and they show before the pandemic. Go to 2019, and before the pandemic, it was close to 60% preferred in a theater. Now it's flip flop, 65% at home versus 35% in a theater. I can't tell if for me it's because of the experience or just the fact that we used to, when I was young, we're talking middle school, high school, college probably, I'd go to a movie once every other week probably. That was just a thing to do when we, like, maybe it's because we had less to do back then, but we'd go to a movie at least once every other week. Now I feel like it has to be a good excuse to get me out of the, and I think a lot of it is just better speakers, better TVs, HD. I feel like all that makes it a better experience where it's not that much of a difference to me.
Well, how about the fact that you don't have to wait 7 months to see a movie after it comes out?
That's true. It's it's much quicker to get it.
I mean, that's it. That's the whole deal. If you wanted to see movie XYZ, you're not going to wait. Like literally, it was how long before a movie came to DVD?
Yeah, it was a long time. It took forever. Months and months.
So now if you miss a movie, Apple's the movie with George Clooney and Brad Pitt is going to be in the theater for a week. How many people are seeing that in the theater? I don't know, 47?
Yeah, what's the point?
What's the point?
They looked at the theater revenue, box office revenue till now, like through early August, and then added on the rest of the year going back to 2015. And you can see we're way below. And so 2024 is below 2022 and 2023, even after having some pretty big movies. And so just this is the new normal, I guess, where and I'm not sure, this probably isn't even inflation adjusted, because I feel like that's part of it.
Right.
That people don't talk about enough is that movie ticket prices are so much higher because you have the IMAX screens and you have the better seats and all that stuff. But if you inflation adjusted this, I bet it's way, way worse even than before the pandemic.
But what's the lines on these charts? So there's a dark red bar and a light gray bar.
So the dark one is up till year to date, and then the light gray is from that point on.
Okay. So look at 2024. It's not that bad.
I don't know.
What do you mean?
It's not that great either, though.
I'm not saying it's that great, but people are talking as if movies are dead, and that's just not true. There was an article in Puck. They say, given the disastrous early months of the year, it's extraordinary to think that the 2024 box office could catch up with last year's $8.8 billion haul, or at least surpass the $7.4 billion from 2022. It's not that bad. And if it were that bad, the Cinemark Holdings, which is one of the publicly traded movie theater chains, wouldn't be doing what it's doing. Look at this next chart.
This is the Mag 7, though. It's Inside Out 2 and Deadpool and Wolverine. What are the other? There's like 4 big movies this year that are lifting everything else up. Equal weighted is not doing good.
Longlegs did $90 million.
That's like one stock that did good.
That's
like picking one stock.
It's not. No. It's not just Inside Out. There's a lot of movies that are doing very well.
Okay, I think it's top heavy.
I mean, that's probably always the case, but my point is the state of the movie theater is not nearly as dire as most people probably think.
Okay. And I think part of it is inflation. I think if you inflation adjusted these numbers, it would look a lot worse. Right? Take 25% off the top of this compared to pre-pandemic levels from inflation, and it looks way, way worse.
Fair.
But I don't think that's something we don't do. We only inflation adjust certain things and not other things.
Well, you inflation adjust if you're looking at like top box office from the 90s. That's all inflation adjusted.
I feel like sometimes they do, sometimes they don't. All right, a bunch of people said we asked for what's the Godfather of this century, and a bunch of people said The Departed. I still think I would prefer Gladiator over that, but not a bad choice.
I think the question was the way that you worded it was sort of vague. I think if we're getting answers if The Departed kept coming up, it's only because they probably thought like, what's the best gangster movie of the 21st century?
True. I said not just gangster. I said just high quality. That's why I picked the Gladiator. But I thought that was okay.
Somebody emailed us. They got burgers from Five Guys delivered on DoorDash or Uber Eats. He said it was $60 plus tips. Let's call it $70. He then made his own ingredients or bought his own ingredients, made it at home, $23. That's a huge difference.
Don't you think Five Guys burgers are 3 times as good as the ones you make at home, though? Have you ever had a burger from someone's grill and go, oh, that was amazing? I feel like burgers on someone's grill, whether you're making them or someone else, they're always just okay. I've never had a burger off of a grill and gone, oh, that's like the best burger I've ever had. Never happened.
That's a good point.
Right?
But nevertheless, that's
why
a lot of money.
Why are burgers at restaurant establishments so much better than someone's grill?
I would guess a pound of butter.
Yeah, it could be. More fat, more. That's true. All right. Story time. I work out of a little office complex that's kind of shared office space. I'd say office people from me working in a single office by myself to other places that have, 10 or 15 people. Very small. I'm on the 2nd floor. Once a week or so, I find this guy in the bathroom. Same guy. And he's washing his dishes from lunch in the sink. And he takes his time. He's in there for a long time.
Hang on. How long does it take to wash a dish?
Yeah, well, that's a good question, But he does this constantly after lunch. What's your thoughts on people washing dishes in a bathroom? I think I don't know. I'm not a fan. And I preface this with, in the 1st floor, if you walk down a level, there is like a shared little place where there's a little kitchenette thing.
My thought is, and I respect the environment, bring a paper plate.
Yes, right? That's what I do. I use paper plates. I'm not gonna. I feel like that's the sink in the bathroom is different than the sink in the kitchen.
I agree. Let me ask you this: you walk into the bathroom, and he's washing the dishes in the sink. Does he give you a hey?
No, head down, which is better.
How old the guy? This has got to be a boomer, right?
He's probably 50s.
Okay, middle-aged.
Yeah.
We had a bunch of people from Ritholtz Wealth Management out to Long Island last week. We get together, and we were on the water, and Sean was on the back of my jet ski, which was a dumb idea. Sean is 6'6". Sean's
a left tackle.
Yeah, Sean was an offensive lineman in college. So I won't say his weight. He's slim, but he's a giant man.
He's a big guy.
and the ski just tipped.
You were driving, he was on the back?
Yeah.
Yeah.
And my phone was in my pocket. And I
Ooh.
thought, okay, well, there it goes. The salt water. Apparently, phones are. I was like, oh no! And somebody says, no, they're waterproof. They've been waterproof for like 10 years now. Did you
So
know
you don't
that?
you don't have to do the. I think I've heard that because I talked about my wife dropping hers in the lake, and people said if you got it out, it probably would have been.
How,
So you don't
how,
need
how
to do
is
the
that?
rice thing anymore.
No, and I don't think that ever really worked, if I'm being honest. But how is that possible? How did they make a phone that is saltwater proof?
I have no idea, and it works just fine.
I mean, I would assume that eventually, if you submerged it, eventually it would stop working, but all good.
Same as
No,
watch technology, right? You have a watch that can go 40 meters underwater, or something.
I don't know.
Isn't
Ben,
it funny though how watches have never made the jump from the metric system? Like if you get a watch, it'll say 40 meters or 30 meters or whatever. It doesn't say feet. No watch ever says feet.
because they're made in Europe.
I guess so.
Yesterday we were doing a podcast, and you said like, it's like impossible to explain words to your kids. The word rhetorical. That's it. We don't even know where to begin.
Yeah, I was trying to explain it to my kids and I couldn't.
So I tried to explain the word pressure. How would you explain pressure to a child? Because I had nothing. I said, the
What kind of pressure are we
feel
talking about here?
thing.
There's like different ways of explaining. Like I wouldn't know. I wouldn't have a good thing.
I think Kobe was playing a game, and there was a lot of pressure on the
Oh,
line.
okay.
And he said, "What's pressure?" And I was like, it's like pressure.
You know it when you see it,
I
right?
explained the word with the word. All right, Ben. So I am breaking out in the movie theater category. Earlier in the week, I saw an independent horror film by Neon, the production company.
Do they know
called-
you at the movie theater yet? Because I feel like you're at least. I said I used to go once every other week. You go once a week at least.
Not once a week, but I'm breaking out. So I went to see a movie called Cuckoo, which was a bit too cuckoo for me. It was quite odd.
This is I don't know how. I feel like I'm pretty in the know on pop culture stuff. Not everything, but you find these movies that I've just never heard of. Like not even like on the radar for me.
Yeah. Well, this is not a Ben movie. Quite frankly, it's not even a Michael movie. This was out there. Even for me. Last night I saw the movie Trap, the M. Night movie.
Oh, okay. How was it?
It was incredible. He truly is a one of one. So the movie, for those of you who have not seen the trailer, Josh Hartnett takes his daughter to a concert, and he finds out very early in the movie, this is not a spoiler, that the concert was a ploy to trap him. He's a serial killer. And so there's SWAT, there's FBI, there's cops all over the place. And so the first hour of the movie with him trying to figure out how to escape, really pretty compelling and good thriller. And then there was a second act that got a little bit crazy. And then I went with my friend and I turned to him and I said, this is about to go off the rails. And the third final act was completely fucking insane. Absolutely absurd and ludicrous. And he's in on the joke, but probably one of the better 6.2s I've ever seen. Just a hell of a good time.
The premise you described actually sounds like a pretty interesting movie.
It was great. And then again, the ending was just absolutely wild.
Okay.
Laugh out loud funny in a good way.
Okay. All right.
Just completely. Yeah. M. Night is,
I'll rent it at some point or watch it on streaming. It comes on HBO.
On Thursday, I'm going to see Aliens, one of my favorite franchises, if not my favorite of all time.
What was the last? I've liked the last two. Does Prometheus count as an Aliens movie?
Oh, yeah. Prometheus and Covenant. And Robin has walked in on me watching Prometheus a dozen times. And every time she goes, how are you watching this again?
I think that's one of my favorite alien movies there is.
Really good. So I'm going to the IMAX in Lincoln Square by myself. I've never done that before. I'm going to the IMAX by myself. And it's going to be sold out.
Okay.
Lastly, I'm taking my wife on a date night to the movie theater on Friday. We haven't seen a movie together since, what was the last movie? A Star is Born. What year was that? 2017?
So wait, can I guess what movie you're taking her to? There's only one that there is. It's the Blake Lively one. That's got to be it.
Correct. So, okay, 2018 was the last time we went to the theater together. So I said to my wife, have you read this book? Because she's read all those books. And she said,
I didn't know it was a book.
I said, we're going on a date. We're going to the theater. So that'll be Friday.
Okay, I think the guy from 1823 or 19, one of those, the Harrison Ford one was in it. Looks okay.
So don't tell me movie theaters are dead, sir.
All right, you're keeping them alive. Here's me not keeping movie theater alive. So I saw The Instigators on Apple. This was a straight to Apple streaming. I don't think it was in the theaters.
I never heard of it.
Matt Damon, Casey Affleck on Apple.
Oh,
it's a heist movie. It came out last week, so we watched it.
How is that possible? How is that possible? That like I'm on the internet. I haven't seen anything about it.
You knew Cuckoo came out, but you didn't know The Instigators with Matt Damon was out.
Shame on Apple. So how was it? Was it terrible?
So it's a 6.5 kind of movie, but it's a heist movie, but it's a lighthearted one. Casey Affleck plays a smart aleck guy. Matt Damon plays more of the straight guy, and it's kind of we're in the joke, but it's also a ton of actors are in it. So it's those two, and Ving Rhames and Ron Perlman and the guy from Boardwalk Empire who plays the rival bad guy. What's his name? Michael Schulman or whatever.
Oh, he's great.
One of the worst Boston accents of all time in this movie, but don't go into it thinking it's going to be a great heist movie, but it's kind of after we got done, I said, good, not great. I enjoyed myself.
Okay.
So, and it was Matt Damon and Casey Affleck, just the two of them for most of the movie, just kind of cooking. But yeah, you're right. Straight to Apple. Apple does not do a very good job. It seems like they have the Netflix style of advertising, but no one watches Apple, so it does just get lost in the ether.
You know what? I saw Neon tweeted something about Cuckoo. I went and I saw it. That's how I got influenced. I saw it on the internet.
I did see those.
I've seen nothing.
I saw those guys on a few podcasts, but that's about it.
What are they doing? Why even make these movies if they're not going to promote it? I really don't get what the strategy is there.
Yeah, worth watching though.
Are you sad that the Olympics is over?
I am. I think recency bias, that was the greatest Olympics I've ever seen. I think and I mentioned this before, the Peacock streaming aspect of it helped, but I think that was the best Olympics I've ever seen. Watching the gold medal game, I was trying to explain to my kids how unbelievable it was to watch Steph and Katie and LeBron all play together and close out games, and they're like, yeah, whatever. And the fact that they were like in their mid to late 30s, but all the other stuff I watched, I got into ping pong a little bit. We watched badminton. We watched like the Gold Zone thing where you can just skip around to different sports. Truly was awesome. And if you didn't, I'd see something on Twitter like, oh, can't believe that race that just happened. And I'd immediately pull up on Peacock and then fast forward to that race and watch it. Was really an awesome way to watch the Olympics. I thought the Olympics were dead like 8 years ago. I was like, it's just not the same. And now I feel like it came back.
First time in my entire life that I watched a sporting event after I knew the result. I watched the Serbia game the next morning.
Oh, okay. Yeah, I caught
never in my life have I done that. Not a single time.
Yeah. I do that a little bit with the kids, but I would just have it on in the background of my office on the Gold Zone and occasionally check in and look, and it was a really great experience. This is like the streaming networks are like, again, figuring this stuff out.
Where's the next Olympics?
Los Angeles. That's going to be even better.
Is that winter?
Well, no, there's a winter one in 2 years. They go every 2 years, but the next Summer Olympics is in LA.
And the winter, nobody pays attention to the Winter Olympics?
Not as much. I don't mind the Winter Olympics. Yes. Okay. Good for you for watching one Olympic sport.
Thank you.
You're a patriot. Email, anything else?
Nope.
All right. Send us an email. animalspirits@thecompoundnews.com. Thanks to all our production staff, as always. Duncan didn't have any comments this week. We must have been pretty clean. I didn't see any. Usually Duncan chimes in with a few Slack comments about something we've said, and he was good. I think I won our Man of the People fight last week. That's based on the comments and emails. I'm pretty sure I was I slightly edged you out.
Okay. We did get a funny email. Somebody said like, not to out Man of the People you, but I also was a dishwasher.
Yes. Everyone's got their thing. All right. Thanks for watching. Thanks for listening. See you next time.